all of our strategy is based upon looking at the fundamentals and taking a 10-year view. And so when you consider the fundamentals of digital capital, you have to start with most important regulator in the entire world, and that is the President of the United States. We have a Bitcoin president, and he's intent upon making America the Bitcoin superpower, the crypto capital of the world, and the leader in digital assets. I don't think you can underestimate the importance of having support for the industry and digital capital at the very top of the political structure. Now, equally important, if we look at the cabinet that's been put in place on the next slide, you see the entire government is now embraced Bitcoin. And when I say embrace Bitcoin, what I mean is 18 months ago, there was one person in the government that had an awareness of it and was skeptical to neutral or grudgingly accepting of it. And everyone else in government was either negatively inclined or they were ignorant of it. And now there are 12 individuals I'd want to highlight here. J.D. Vance, the vice president, Scott Bessent, the Treasury Secretary, Paul Atkins, the head of the SEC. Number 4, Kevin Warsh, who is the Fed chair nominee, who understands digital assets, understands the use case of Bitcoin. This is a tremendous move forward for us, a big fundamental shift that now you can look at the head of the SEC, the head of the Treasury, and the head of the Fed as all appreciating the pivotal role of digital assets in the growth of the country and the economy. And if you go to the second line, right, you see the head of intelligence, the head of the Small Business Administration, the head of federal housing, the head of health and human services, all Bitcoin believers. And then Michael Selig, the CFTC chairman, David Sachs, who's doing a wonderful job, Howard Lutnick, Commerce Secretary, and even Kash Patel. So if you consider that, we went from one neutral to a Bitcoin president and 12 positive constructive. These are great fundamentals for us. And I don't think we can lose sight of this because everything that follows in the marketplace is very much influenced by the political structure of the world. On the next slide. Capitol Hill has embraced Bitcoin. We've got bipartisan consensus that the United States should embrace digital assets, should embrace digital capital, should be a leader. That is not a debate. No one's saying that there's one party in favor of digital capital, another party against it. That's a big deal. So although the political process is complicated, the fact that we have moved from an asset which was a scary speculative thing and maybe illegitimate to a legitimate asset that most reasoned politicians and regulators and policymakers believe they need to move constructively forward with. Let's go to the next slide. Big banks are embracing Bitcoin. Roll the clock back 18 months, and this Harvey ball diagram is pretty much blank, mostly blank. And so when you actually look at the top financial institutions and you ask the question, do they allow IBIT trading? Well, there's an avalanche of support there. That's flipped in 12 months. The second question is, do they offer credit against IBIT? That's a big deal. 12 months ago was almost impossible to get a loan or a margin loan against IBIT. Now there are many banks coming into space. Would they let you trade BTC? Now you have banks that are announcing support for that. You have banks announcing support to custody BTC, and you have banks announcing intent to offer credit against BTC. Again, this is an extraordinary sea change. We cannot underestimate the value. I think that the fundamentals of the industry are driven by the banks creating credit. One bank can create as much credit as all the Bitcoin miners can create in Bitcoin in a year. So each bank that turns on Bitcoin-backed credit lines might be the equivalent of another halving for the network. Let's go to the next slide. TradFi and FinTech have embraced Bitcoin. If you look at the number of accounts with BTC trading asset, there's a pretty clear bullish trend here. both across crypto native exchanges, fintechs and neobanks, and the brokerages and banks and the wealth management channel. Those are large numbers. Fundamentally, we're going from an asset class that no one could buy if they wanted to an asset class where everyone is competing to facilitate access and exposure. The next slide. This is the ETF trend. ETFs are embracing Bitcoin. 125 ETFs or ETPs launched. 1.4 million Bitcoin held in them. A very consistent trend up and to the right. Next. And this is the corporate trend. It was nothing in 2019. We were the first serious player. We were lonely for a bit, then we went to 33, then we were 64 in 2024, and now we're 194. This is clearly explosive growth, and there's a signal here. Next. The public markets are embracing Bitcoin. Look at these IPOs that have taken place this year. Bullish, Circle, Gemini, BitGo, Kraken, that's coming. And then Coinbase, Block, and Robinhood have all been included in the S&P 500. So I see this as a very bullish indicator and a fundamental improvement in the structure of the industry.